Daily Journal Corporation, a newspaper and a software company whose stock portfolio is managed by Charlie Munger, has decreased its holding in Chinese internet behemoth Alibaba Group Holding Limited by about half. Hey everyone, welcome back to our channel. In this video, we'll be talking about why Charlie Munger sold 50% of Alibaba's stock. And before we start, make sure to hit the subscribe button and turn on the notifications bell. Done? Let's get started. Charlie Munger became one of Alibaba's most famous bulls in 2021. At the end of 2021, his Daily Journal Corporation possessed 600,000 ADRs in the Chinese-based company, but according to the most recent filing, that number has been cut in half, with only 300,000 shares remaining at the end of March. While Charlie Munger used traditional valuation metrics and looked at Alibaba's market potential to rationalize ownership, Beijing's direct and indirect meddling in the company's activities prevented the stock from growing and pushed significant investors to cut their losses. Alibaba's shares have dropped by 30% since my piece, Alibaba Charlie Munger is Wrong Again, was published in late November, and there's little evidence that the company will recover anytime soon. Despite the fact that Daily Journal still owns a large stake in Alibaba, the decision to sell half of its stock could be interpreted as a loss of faith in the company's ability to perform well in the current environment, as it would make no sense to sell shares when they trade at a significant discount to their Western counterparts. As a result, the purpose of this essay is to examine why things didn't go so well for Charlie Munger and the Daily Journal, as well as whether there is any value left in Alibaba at the current price, without rehashing the arguments I've made in the previous articles about the company. It all began more than a year ago when Charlie Munger's Daily Journal said that in the first quarter of 2021, it will open a position in Alibaba. The number of shares owned increased in subsequent quarters, and at the end of December, Daily Journal had 602,000 Alibaba shares. During that time, the stock has depreciated, and if it was trading at $240 per share at the start of 2021, it was trading at $120 per share by the end of the year, resulting in a significant unrealized loss for Daily Journal's portfolio. In the first quarter of 2022, everything has changed. According to a recent Daily Journal filing, it only had 300,000 Alibaba shares in its portfolio at the end of March, implying that it had lost half of its holding in the first 3 months of this year. When Charlie Munger stepped down as chairman of the Daily Journal on March 28th, suspicions began to circulate that he wasn't the one who made the decision. Munger served as chairman of the Daily Journal for many years, in addition to serving as a vice chairman of Warren Buffett's Berkshire Hathaway Incorporated. According to a regulatory filing at the time, the 98-year-old billionaire would stand down from that job in March, but would retain a board membership and continue to pay particular attention to areas with which he has been involved in the past, including the company's securities portfolio. He also stated that he will donate $1 million in business stock to establish an equity incentive plan. The Daily Journal is well known for its collection of publications as well as its software sales to customers such as justice agencies and courts. In addition to its running businesses, the company owns a stock portfolio comparable to Berkshire Hathaway's practice of investing while holding businesses. At the end of March, its stock portfolio included 5 publicly reported interests, including the Alibaba holding that it began revealing a year earlier. Munger's AD declined to comment on the Daily Journal's shareholding in Alibaba. Alibaba's American depository receipts fell about 50% in 2021 and are now down roughly 14% this year. However, it appears highly implausible that Daily Journal sold 302,000 of its 602,000 shares in the final days of March, as this would have pushed the price much lower and would have been noted by the market. Furthermore, some sources claim that the Daily Journal sold half of its interest in the New York Stock Exchange and then repurchased it on the Hong Kong Stock Exchange. It also doesn't make much sense. To begin with, Alibaba's shares on the Hong Kong Exchange are likewise represented as a variable interest entity, which does not grant direct ownership of the company, and it makes no sense to transfer only half of the position to the other exchange while leaving the other one alone. So far, it's all supposition, but the fact remains that Daily Journal lost money on Alibaba during 2021, and it no longer owns half of the shares it did at the end of the year. Charlie Munger has a track record of investing in undervalued companies and reaping substantial profits over time. The majority of the enterprises in which Charlie Munger invested were American, whether through Daily Journal or Berkshire Hathaway. There were just a few foreign investments, such as BYD, that gave good returns over time. Charlie Munger has made his money at home apart from that. One of the most compelling reasons to invest in Alibaba was the company's shares trading at a discount to its Western counterparts. In actuality, he is entirely correct. Alibaba is currently trading at barely 2 times forward sales, but Western IT behemoths like Amazon and Apple are trading at 3x and 7x forward sales, respectively. Alibaba, on the other hand, operates in a more hostile environment, which explains its smaller premium and is one of the key reasons why it will likely continue to trade at a discount in the future. Don't forget that Daily Journal bought its first Alibaba stock after Beijing's crackdown had already begun. While it made sense to buy the business's stock only on the basis of its fundamentals a year ago, given that the price had depreciated by more than 20% from its highs, the environment in which the company had operated over the previous years had already altered dramatically. The issue was that Alibaba had grown too powerful and political in China, and in authoritarian and totalitarian governments such as China's, any subject that grows too powerful historically is neutralized. As a result, it's impossible to ignore politics when investing in companies operating in nations with weak legal systems, where the ruling party can interpret laws as it sees fit to achieve its political objectives. Daily Journal lost a lot of money because of that one mistake. Furthermore, while Beijing's attack on Alibaba began more than a year ago, it is still ongoing. Alibaba is now compelled to pay more in taxes after paying a record fine of $2.8 billion to the government, and 20% of its liquidity will be deposited in Beijing's Common Prosperity Fund. Furthermore, the recently enacted algorithmic restriction may prohibit Alibaba from making big profits from the digital advertising sector, whilst Beijing is explicitly attempting to undermine Alibaba's supremacy in the cloud and digital payment companies. With all of this in mind, it becomes far more difficult for even experienced investors like Charlie Munger to predict which way the firm will go and how much money it will create, because the answers to those questions are only known in Beijing. Nothing has changed since then, which is why it's difficult to assign any value to Alibaba at this time. Regardless of how many times bullish investors claim that Alibaba is a bargain at its current pricing based on the PE, PS, and other traditional valuation metrics, the reality is that those metrics are meaningless at this point. Alibaba was already cheap when it was traded at $250 per share, $200 per share, $150 per share, and especially now at $100 per share, according to several multiples. However, this did not prevent the stock from further falling. That's why, given the political risk, I'm not excited about the company's newest intention to spend $25 billion on share buybacks. It could have been feasible to justify purchasing Alibaba if it were based in the United States, for example, due to the radically different power dynamics that exist there. For years, there has been talks of dissolving the big tech monopoly, yet conglomerates like Apple, Meta, Alphabet, and others have continued to grow and thrive. Even the European Union has done a better job of regulating American big tech than the US government. That's why it was difficult for even Charlie Munger to predict how far Beijing would go in its crusade to regulate the country's biggest tech behemoth, given that the majority of his portfolio was made up of American companies that operated in a completely transparent environment and were taking aggressive actions against the private sector was difficult. In China, things are very different. Worse, the revival of COVID-19 in China, combined with the lingering effects of the property crisis triggered by Evergrande's bankruptcy last year, will have a direct negative impact on China's economy. Officials in China have already predicted the slowest economic growth in decades, and Alibaba has already disappointed investors by missing revenue and GAAP EPS projections for the third quarter, which it announced in late February. Alibaba now has even fewer opportunities to promote growth and drastically improve the state of its business as a result of these new developments. Add in China's forthcoming elections, and it's clear that Beijing isn't going to back down anytime soon. Charlie Munger is an investment legend, without a doubt. We're sure a lot of us learned how to invest by reading Poor Charlie's Almanac in our spare time, and most of us will never have the same track record as Charlie Munger in our lifetime. Even the finest, though, may make mistakes. Charlie Munger and Daily Journal hinted that the Chinese juggernaut is not that appealing to purchase even at the current price by reducing half of their investment in Alibaba after just holding it for slightly more than a year. Did you find this video informative or helpful? Let us know in the comment section below. Make sure to subscribe so you don't miss out on my future videos. Don't forget to like and share.